Everybody, today is Wednesday, Thursday, the 28th, and the S&P made it right up to that volume weighted average price from the March 29th high that we've been talking about. As I mentioned, I thought it would make it there this week, and here we are. We are a little bit extended short term, and in the midday video, I mentioned, the way you trade these is basically the same way I talk about all the time. That we look for a pullback to the prior day's VWAP. If it holds there and then gets back above today's volume weighted average price, and it obviously broke this little band of resistance that formed first thing in the morning, that you can buy right there with a stop either under this low or this low right here. It's up to you to decide how to use this information. I'm not here to say buy this, sell that. It's about what's the path of least resistance, what's your time frame, what's your personal risk tolerance. Just because this move began 3 days ago doesn't mean we can't continue, or 2 days ago doesn't mean we can't continue to benefit from it. And that's why I pointed that out midday, not to show you that this is a day trading service, but to say that these are the concepts that I talk about in every single video. We talk about the pullback to the prior day VWAP. If it holds that and then gets above the daily VWAP, that's the strategy I talk about with the individual stocks and with the S&P 500, and of course with the Nasdaq. Same exact story. We saw that it pulled back. In this case, it held below the 2-day VWAP, but as it got back above it, overtook this little lower high and the daily VWAP. The buyers were in control. They maintained control. This market is now up through that volume weighted average price anchored to the March high. And, where does it look like where we have the potential to go? I wouldn't be surprised to see a break of this peak right here and then for a pullback to begin. That would get the so-called breakout buyers involved. They'd be all excited and say, hey, look, it made a higher high. They wouldn't be asking where has it come from. Instead, they would be foolishly chasing momentum. So I think it can continue. I don't know if it's going to continue. Nobody does. What I do know is that if you're going to get involved on the shorter term time frames, you manage risk based on those shorter term time frames, in particular as the markets get a little bit extended and to these levels of interest, such as key volume weighted average price levels, prior resistance levels, prior peaks, that is. And the Russell 2000, same story. I think that it's likely we're going to get up through this peak right here and go on to test the year-to-date volume weighted average price. That's something, that's been the theme of the last week and a half. I'm not bullish on the market overall. We're still in a primary downtrend, but that doesn't mean we can't take advantage of these moves when they occur, and they're occurring right now. So you have to be open-minded and willing to take advantage, or be comfortable on the sidelines and cash. This market caught up this afternoon to the S&P and the Nasdaq. If you recall, during the midday video, this market was approximately right here. Now, I didn't think it was a good buy there because it was extended. This isn't the type of purchase that I want to buy above the VWAP. So it's the same story as always. Where has it come from? It came from 182, let's just call it, to 183.75. In my mind, that's too far extended, because where would our stop have gone at that point? Our stop would have had to have gone under here. That's the most recent relevant higher low. With the S&P, when we buy here, we can put our stop close by at this higher low or the low of the day. For the Nasdaq, we buy here with a stop below the most recent relevant higher low or the lower of the day. Russell 2000, buying here, that's your most recent relevant higher low. That's your low of the day. That's too much risk. I'm not interested in those purchases. So again, the concepts are the same regardless of the time frames. Semiconductors, we saw the pullback in here. This is what I'd sketched yesterday, and then the rally. These moves are tradable, and we saw the same thing. It got back above the daily volume weighted average price. Now in this case, I didn't trade this, but had I been watching it, I probably would have looked to purchase right here because it made that consolidation. So in other words, if it was somewhat extended from this move, but because it turned sideways and consolidated in here for about 25 minutes or so, as it broke that higher high, with a stop under here would have made sense. Not, of course, below this higher low or the low of the day, but in this case right here. So there are always different ways to trade it. If they don't correct price-wise, then I want to see that time correction where it shows, hey, the sellers have had the opportunity to come here and take control. Instead, the buyers make a higher high, What would invalidate that budding, emerging uptrend at that moment? Forget about everything you see to the right of this. At that moment, it looked like the buyers were gaining control. And if instead it did this, well, then that's where we would have, looked to sell. So over to the daily time frame, it seems plausible that this market can make it up to this peak as well, and perhaps run up through the year-to-date volume weighted average price before this rally really runs out of steam. That would catch these so-called breakout buyers, and then perhaps we would come back down and do this. What would that look like? Well, that would look like a left shoulder, that would look like a head, and that would look like a right shoulder. That's thinking 3 steps down the road. Let's deal with what we have right now. That's a possibility. Keep focused on these types of moves. Those are the ones that you can position yourself into today during the day, tomorrow maybe during the day, etc. Biotechs continue to hover with around this year-to-date volume weighted average price. So, since they came up through it, they've done a whole bunch of nothing. The breakout buyers are getting what they deserve. Either they, sold off with losses, or they're being frustrated here 2 weeks later. Now, when we look at a 30-minute time frame, of this action, what we see is, this prior resistance holds as support. That's good. Looking to the 15-minute time frame, it's a choppy mess. So, we'll continue to keep an eye on it. But for now, there's really no reason to look to be involved, not yet at least. Financial stocks, I think they're a mess. It seems like they're headed for the March 29th volume weighted average price. I'm not going to trade them. If I was going to trade them, I would look for something along the lines of this. And same story, would you want to buy right here? That right there is the same exact point as this point right here. Please understand this message. It's a message I repeat every single day. Don't wait around for other time frames if you're going to trade on shorter term time frames. So anyways, the financials, they kind of did the same thing here today. They got back above the 1 and 2 day VWAP. You could have put a stop under here. Tomorrow, if they do this, well, we'll look for the same exact thing. We always look for the same exact thing. That's the beauty of using market structure for your trades, rather than trying to, wait for a 20-day moving average or a, MACD to cross or whatever. It's about money and the way it moves through the markets. Energy names are rallying here. They seem like they're likely to get up to that March 29th high in the 50-day moving average. The volume weighted average price from the peak is right here. So far, it's not closing above it. I certainly wouldn't chase them here. I would be more interested in looking for a pullback first, and then maybe sometime next week it could, make this, it could work off this overbought situation, pull back, build some energy, and then make a run for that area.